Jamie. So it's like you're the home team. So feel very comfortable to be here. Haven't talked to Jamie in a while. It's always great to hear your voice, Jamie, and see what's on your radar, partner. So you have a lot of fans in here.
All right, all right. Hey, can you hear me?
Yeah. So, you know, Steve Volge's not easy to please. And he enjoyed your book on sentiment. Congratulations on that.
Good to hear. Good to hear. How you doing, Dale? It's been a while, man.
Good. Yeah, you haven't been here since I joined ForexAnalytix, have you?
I
just lost
don't think so, no.
Okay.
I don't know. Maybe I might have been there.
You're both wrong.
I think I was there.
Here once. Yeah, he has been here once.
Oh, okay.
Yeah, I think I was there once, early on.
Oh, one of the. Okay. It was so memorable.
Yeah.
So no, can't even remember. All right, buddy. So, Jamie, you know, I tweeted you. I was going to grill you. I mean, ask you about what you thought was going to be a pretty good wave looking out, and you know, use a little surfing lingo that you could get in and come through the tube clean. You know, not get wiped out by the wave closing in on you. So, you want to start with the Dixie? What do you see here, bro?
Yeah,
what do you
so let's just start with the dollar, DXY in particular, and wave-wise, we're looking at the weekly here, right?
Right.
So wave-wise, at least going out from, you know, from the 20s, I think it's safe to say that you've got a 5 down, right? Okay, fair enough. The question then becomes, how do we count this from February?
Okay.
So, you know,
bounce from 88.5 or so.
Yeah. So is this a 1, 2, and then is this 3, 4, 5, or is this A, B, and is this all a C? For me, it doesn't really matter. I'm trying to stay, you know, kind of closer to home and just understand, are we at resistance or closer to resistance than not? That's really where my focus is. Okay. And that is where the, you know, the angles or the slope analysis comes into play, and that everything, all the extremely important angles to me are simply the 2008 to 2011 trend line.
Okay.
So, you know, that trend line, I have the whole channel drawn up here, but really the important levels are the ones where price crosses highs and lows. So you can see here that was, you know, ideal, and nailed the low down here. And where we are now is we're kind of up into the region where we would expect to see a top, and it's been pretty it's been arduous, I guess you'd say. You know, we've had this what seemed like like a reversal over here in early June. We had last week what seemed like a reversal. You know, we come off a little bit to start this week, and then here we are right back at, you know, if we were to close here, we'd be right back on a closing high. That doesn't change the fact that we're in this area for resistance.
Well, maybe it needs one more to complete. I'm pretty big on 3 drive formations. Maybe
yeah, it might be what, and therein lies, if we look at just an equal leg thing, you know, go from down here, right? So let's go equal legs, you're going to get 95.87.
Okay.
Right. So that would be a possibility too.
Okay.
95.87 would put you, you know, that'd be a pretty solid move from here, right? I don't know, that probably puts you like 1460 on euro, and
that's what, about 61.8 back from the whole move from 103 to 125.
Yeah, and I'm not, you know, let's go to the euro here. I'm not so sure that we're going to get that move. I mean, who's sure about anything, right? If you think you know what's going to happen. Right?
I'm sure that everything can happen.
Right, exactly. The only person you're fooling is yourself, right? If you think you know what's going to happen. But let's go. So here's euro. let's go to, this is a weekly now, and we've got this broad channel. And by the way, I'm on linear scale.
Okay.
I talk about this a lot with people. You know, you hear some have to look at log scale on longer term charts, and you have to look at this. There's no have to anything. When I look at log scale, the channel, yeah, you kind of brush up against these lows, but linear scale is actually a lot cleaner. You can see that within the channel itself, you've got, you know, the what I call the 25 line and 75 line. Lots of touches on those, including the low back here in 2017. But also, importantly, this is the level that was resistance, right, on linear scale. So let's take
the whole thing
that.
is kind of like a pitchfork.
Right. So I mean, you call this a pitchfork, but really it's just a channel.
Okay.
We're just drawing a trend line from back here.
Uh-huh.
Right.
Got it. Yeah.
That's all it is. So, you know.
Okay. So we threatened that channel line, got turned back.
Well, yeah.
What's your bias if we're going to go back up there and take it out to the upside, or we're going to
well, so here's
fail
the,
from here and go the dark black line, which would be near the lows of 2016, 2017? That's a big question,
I don't think
isn't
that's
it?
going to happen.
Okay.
Yeah, so let's draw in. We can actually draw in a. I'm going to talk about the concept of symmetry within. So now we are going to draw a bullish fork here, okay? And we're going to talk about the concept of symmetry within a fork. Okay, so here we go. 15. All right. So what we're talking about here is, you see the distance between the center line and this line up here is the same between the distance between the center line and this line down here.
Interesting.
Right?
Yeah.
So that is one of the concepts that you find in median line analysis. So see how that line was former resistance, right? Last year.
You're a natural
February,
teacher.
March. Okay. The behavior around there is important, because once you broke through it, you really broke through it, and it, you know, that really was what got the whole bull market, you know, in euro going. Well, look at where we bottomed last week. Okay, right on that line. That's important to me, not just because this was former resistance and resistance became support, but also because of the concept of symmetry, where the tops back this year, right, in January and February, were more or less on that line. Yes, you spiked through it, okay, and that was also the top back here in May of 2016. So there's a natural angle, so to speak, at play right here in euro, and you know, about the deepest that I would, you know, my working, I guess, call it the bias or whatever you want at this point in time, is I want to be a buyer in euro. I want to see a little bit of, you know, want to see some constructive action, which, as I'm talking to you, we might have just made a low. I don't, you know, we just dropped to 1594, and you get the 6-1 of this little run up here is 1590. So for all I know, that might be it. I don't know. It feels so damn wrong to try to buy euro down here, so maybe it's the right thing to do. I don't know. But yeah, so this to me is very important. That's all I'm getting at.
All right. I know, you know, Jamie, that you also really like the bond market. You brought it up last time we were together. It seems like every time we talk, you bring it up. And, you know, we had that huge short squeeze with, you know, large spec positions in the bonds that we got that big rally, I don't know, about a month or so ago. And recently we pulled back. It still looks like we could shake out some more bears to me. I'm wondering what your thoughts are in the bonds. And, you know, and the reason I say it is, if there's one universally embraced market thesis, it's that bonds are in a bear market. Is everyone right?
No, yeah, absolutely.
They are.
Yeah, I mean,
Everyone's right.
is everyone right? Right.
Yeah.
Yeah. No. So here's my thought. Here's my thought on that. I'm gonna go. Let's start with two things here. Let's start with just looking at the really long-term trend line structure, what have you. Okay, and then we're going to look at a comparison with kind of history, okay, in the bonds, and you'll know what I'm saying when I get to it here in a second. So first of all, what happened? I like to say, what do we know? What happened? Well, we know that we dropped in May and took out 2014 November low, right? Right here. Okay. We had a bounce, a little squeeze here, right? In the grand scheme of things, you're right. It's not that big of a squeeze, though. So I think
Not yet. Yeah.
the natural, right, I think the natural place for this to go is up about 151, in particular, this red parallel, if you will. It's not as precise as some of the other things, but you can see when we've bounced off of or near these longer term trend lines down here, or angles, you know, initially the first place you stop is this line here, right? Here you go, right here in 2007, right? Coming off a big low, coming off lows, kind of where do you go into, right? Consolidate up around this line here. Even back here in 2011, that's where we went to before we pulled back, and then the market resumed higher, right? On the way, here's, you know, more recent history, 2014, you know, 2000, yeah, that's throughout 2014.
So it could just be an ABC back to your red line channel.
Yeah,
and
this
then
is
a resumption of the trend.
It could be, but I think actually, so this is where we're going to go and look at something a little crazy. Okay. All right, so history kind of has a way of mirroring.
Oh, you have a fractal of the bonds here?
Yeah, so let's look back to what happened, you know, 38 years ago. Starting in 1980, right? You had a big low, kind of had three major bond lows, right?
Yeah, that was Volcker tightening rates for 20%, 15 or on the long bond, I think, down there.
Right. So let's look now, the first, let's say, you know, the first bond high. Here, we'll just.
It's pretty close.
The first bond high, the second bond high, of course, after Brexit. Maybe we need a third rear high. So what this is just a mirror image of that. So I'll take this bad boy right here, and you know, this is kind of crazy stuff, like, you know, whatever, but and then we can mirror that, and you can see that's what we're looking at here. Okay.
That's a hell of a rally from here before the big failure.
Yeah, it is.
There won't be a lot of bond bears left if we're up there. So, you know, you're probably talking about on the 10-year under 2% yields, like 1.9 something.
So if we zoom into this, right, we're at the exact point where, you know, the time from the 1980 bond low would equal when the big decline started in bonds into the final low. And if you reverse that idea, where the big bond rally could start before you go into the final high, right? This is just a something that's a possibility in my.
Okay.
Mind.
You think that would include,
you know, I'm not like, you know, you're not trying to predict the future here. But.
All right. Well, give me a Nostra.
Yeah. So something to think about it.
All right. What do you think would be the catalyst for that? Risk off in the indexes?
I don't know. Frankly, I don't know. I get that's probably the obvious answer, right?
Right.
But I mean, what if you know, we've had what, the bond market and the stock market rally together,
Yeah, it's happened.
really throughout history. I mean, what if that happens again?
Yeah.
You
Good
know?
point.
I mean, what
Good
if like the whole inflationary story that's been going on kind of like goes away for a while, you know, and we go back into this, you know, this period, we go back into the risk parity world, which, you know, everyone has kind of said is totally screwed and over with. So
Okay. And maybe if that happens and they're all good, maybe the dollar is good too. And it's just a flow into dollar denominated assets that keep them both running in bull mode. What do you think?
maybe,
You know,
maybe.
people avoid
Well,
emerging
yeah.
markets, you know, regions that have a hard time with a strong dollar, which is most, and not us yet. Anyway, just a thought I had. Any other markets piquing your interest in here lately?
Yeah, so why don't we look at, well, I think let's look at crude. It's obviously been
Yeah.
a big thing to look at here. So let's start with a near-term chart, or this is a daily chart. So a couple things. We've got, okay, so this is a log scale, by the way.
Okay.
But we are looking back at a trend line from 2008, right?
Mm-hmm.
2013, 2014. Okay. The symmetry thing again we were talking about. Symmetry between, this would be the center line of this entire channel, right? And take it all the way down to this level. That's where your low was in 2016. Okay.
Right.
Take it the equidistant from here, hits these levels, and that is actually where we topped back in May, right?
Right. Yeah.
It's a really important level. We had a nice pullback. I was thinking we'd get actually a little deeper, right? I was looking for us to head a little closer to this trend line down here, which I have drawn from the January low, not the February low. That to me is
you were thinking we were going to get sub 60 for a buying opportunity.
That's correct. That's correct.
Okay. And what would make that be off the table? Even if we made a new high, Jamie, can't we get in a regular, that could have been A down, a regular B at new highs and then sell off?
Yeah, it could be.
I mean, I know nothing about Elliott, but
I'm actually looking at, right.
We're right
it
at
could be, there's a lot of, right, so this could be, yeah, and this could also, you could have an A here, and this could be B, and this could be, you know, there's all kinds of possibilities. But
yeah.
within this short-term channel, the price that I'm watching, again, these are parallels based on that January 2016 line, and levels I'm looking at are going to be, you can see where we came off of, again, talk about symmetry. I'm looking right here. So that's going to be a shade over 72.
Okay.
It's also where you closed. There's also the day of the high. It was the close of that day. So
okay.
That to me is an important thing to watch out for. You can see the longer term line coming in here. So with crude, all I'm going to say is that I've got this 72, call it 72.10, 72.20 kind of marked as a very important spot.
Okay. So any hope for
near-term resistance?
Any hope for precious metal bulls? I know Volge started nibbling at gold today, and they've been disappointed forever. I mean, I thought it's looked lousy. The shares normally lead, and the miners have been weak. What are you thinking here?
Well, some have been weak.
The metals.
Some have been strong though too. It hasn't been
silver.
You know, so like here's
PMs.
Right. So this is Gold Resources. This stock has been up pretty good.
Okay.
Hold on. We've had some miners have actually been very strong. So like here's a miner that's been ripping. You know, it's been all over the place, right? You've had, I guess, GDX has been not great.
That's interesting. Most of them look more like GDX. but that must be some kind of special situation. It looks good. It's holding up during this whole gold decline, going up
Yeah,
with gold
you
going
know,
down.
there's always places where, yeah. Um, Gold for me is basically, I guess, the last hope for anything is
1240.
probably just going to be draw a line off these lows.
Yeah.
And yeah, 1235. Maybe take out the low from December of last year. And you've got, by the way, your 200-week average down there, which is in blue. And I also look at a 3-year average, 156-week average, and that's going to be down there too. You can see that we crossed that a couple times here over the last year. In fact, last July. So to me, that's
if we close under that, you'd be looking for it to go that lower line, which looks like 1100 or something like that.
At that point, yeah. I mean, at that point, you're talking maybe
1110.
maybe even a
Yeah. Then you could go that median line. Yeah, under 1,000. Huh. Okay. Well, Jamie, now would be a good time because I give you a full-throated endorsement, and when guys are pros like Volgi and Stelios, Contos, are fans of yours and reading books, I give a full-throated endorsement to your work as well. I've known you for years, so now would be a good time to show your website and talk a little bit about your service so that people that just got a little, sneak peek at your thought process in the markets would know how to continue to follow you or subscribe, etc.
Sure. So
the commercial part, man.
Oh yeah, I'm so bad at that part too. What can I say?
Oh yeah, you're pretty good.
All right. So here we go.
10,000.
So here we got the hold on. Is it so? If all right, you go to the website, our website. So sbtradedesk.com. I do the long-term chart updates, which are actually pretty infrequent because again, they're long-term chart updates. And then we've got swing updates that are written every day. And these will have, so like here's yesterday's, okay. Had some charts on DXY, Euro. We were talking before, this is like a 4-hour chart. So he said support looking at 15, that 90 level, which I think we just got to just about, and we're getting a little tiny bounce, but you got to start somewhere. Dollar yen, here's a dollar yen chart, 4-hour chart looking at 1050.60 as a spot potentially. So it's really just the kind of analysis that you just saw, right?
Right.
Median line analysis.
What's the idle search? Idle search.
Oh, so that is a. Oh wait, it's not open yet. It doesn't open until the market opens, or we can't get it until the market. What it is it's an algorithmic.
You guys coded something?
Like algorithmic, like analog. It's an analog thing, like where it matches up current price action with historical price action, based on an algorithm. It's pretty cool. Very, very cool actually. But there's a whole video on that too. If you guys want to watch it, anyone can go to this. It's free. There's a whole platform walkthrough on this stuff on IDO search.
And you have some live sessions. How often do you do that?
Yeah. So we do live sessions. So like for example, this week I'll be doing a live session with our members at 11 Eastern. So in like an hour and a half. And then Mike Boutros does 3 a week. He's doing one right now, actually, with members. So that will be Tuesday, Wednesday, and Thursday. He does like what we call the scalping webinars. So it's really short-term stuff, where my stuff's going to be more kind of, I guess we call a swing, right? Or can turn into something longer than that.
Well, okay, you're a swing trader. What do you think of this, Jamie? Because, the big problem for most traders is they end up being right the market, wrong the trade, because they don't let their trades breathe.
I lost.
How about, okay,
I lost you
a lot of people, their problem is they're right the market, wrong the trade. They don't let their trades breathe. What do you think of this? If you can't be wrong for a day, how can you be right for a week?
Yeah, absolutely.
Okay.
And yeah, I agree 100%. And you know, it's nothing wrong with being wrong. I mean, you're going to be wrong more than you're going to be right. It's just right. It's protecting what you got, allowing yourself to be right. Right. So
Right.
that when you are right, you can cash in. So nothing wrong with being wrong, but like there is something wrong with just sitting in a bad trade, right?
Yeah. Done it.
You know. Yeah.
Okay.
Well, I mean, so have I. And if you know
Yeah.
anyone says they haven't, then
Yeah.
they're lying. But yeah.
Yeah. Well, it was great talking to you, man. Thank you so much for those views on bonds and the dollar and gold. I appreciate it. And, I think this is, you're gravitating more towards a little different kind of analysis, median line stuff. I don't think we were doing that prior. So you're like a lot of us, Jamie. The learning never stops, does it?
That's right. The learning never stops, and you know you kind of do what's working and less what's not working. And I still, with me and Elliot, I still, you know, use Elliot in my analysis, but it's like I don't want to be forcing an opinion on the market, So the
Right.
the wave analysis really keeps me from, or the median line analysis keeps me from doing that, right? It's like, are we hitting supports? Are we breaking through supports? Are we hitting resistance, breaking through? Rather than just trying to conjure up a narrative to say, well, this is a whatever wave, therefore it's going to do this, right? It's like if it sticks out and it's just so damn obvious, 5 up, 5 down, 3 up, 3 down, whatever, then it's there and use it. But
It's interesting. So you've had
I don't
you've
like
had
the idea of forcing an opinion.
yeah, you're evolving to make it more simple and not and take
Absolutely.
some, keep it simple. Forrest Gump, he's my trading model. So Jamie,
Yeah.
great talking to you. Excellent interview. I encourage people to check Jamie's work out and visit his website at SB Trade Desk, and you can follow him on Twitter at Jamie Saettele. And good hunting, my buddy. Have a great summer trading season. I hope pips rain down on you and Chris and all of your clients.
Dale, thank you, brother, and you as well. And we'll do it again sometime.
All right, man. All right,
All right.
Jamie Saettele, everybody. Jamie is awesome. Dan Norberg. All right, Jamie. So that's a wrap for us, everyone. See you tomorrow for investing.com Thursday. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thank you, Jamie.